I'm Charlotte McLeod with the Investing News Network, and here today with me is Jeff Swinoga, National Mining and Metals co-leader at EY. Thanks so much for being here today.
Well, thanks, Charlotte. It's always a pleasure talking with you.
Right, and we're here at PDAC. We're going to be talking about a recent post you did on top risks and opportunities in the mining sector. So we're going to go through that a little bit to start off with, I think. One of the points you made in that is about license to operate and ESG. This is going to be a broad question, but how are companies doing at this right now? We've had a kind of an interesting situation here at PDAC with protesters outside.
Yeah.
What's going on?
Well, ESG and licensed operator are so important for the mining sector in particular. I mean, ESG, if you don't know, is environmental, social, and governance. So it's about doing the right thing, but what does that mean, right? So there's frameworks out there that are being created or have been created to sort of provide a guideline as to how companies can do better. Most recently, the World Gold Council came out with responsible gold mining principles. So they're making a big push to kind of create this framework, created this framework for companies to follow. So we've been talking to a number of clients about that in the gold sector. So, and I think that also might provide a framework for other companies to sort of follow, if you will. So it's great. When you think about when we're talking to board members and CEOs and others about why it's important to do the right thing, but also it's important to attract capital. Because, about a year ago I heard there's going to be billions of dollars coming to ESG funds. Now I'm hearing trillions of dollars coming to ESG funds. So for mining companies to attract the type of capital, they have to look at sort of metrics that are important to them, look at frameworks. And so my view on that is, my personal opinion is that companies that early adopt sort of ESG policies that are friendly or licensed to operate, they're going to attract more capital. They're going to see a premium on their share prices. And what we're going to potentially see is a polarization, a greater polarization of the mining sector.
Right.
So that's going to be another lens that investors use now to look at mining companies. So we're seeing it already. We've already seen some movement in some share prices based on that. And so anyway a company can attract sort of these sustainable funds is going to be extremely important in the future.
Do you think right now that the general public knows about this? Do they know that mining companies are doing that? And if not, do you think companies should be doing more to get the word out that, hey, we're doing this right now?
Absolutely. And I think on both sides, the understandability is important.
Yeah.
Because from an investor perspective, I think that what does ESG really mean? Is it more CSR? Is it embedded within the company culture? Is it in their values? So how is a company really looking at their ESG sort of programs? And so from a company perspective, it's the same thing. Say, how we look at this. Some companies are creating ESG committees on their board, but is it really ingrained in their whole company attitude, right? And so some of the stories I've heard recently, and these are great stories about how, in foreign countries like Africa, where they've decreased the poverty levels from like 26% down to 6%. And this is a very large company who was telling me this, and I'm like, wow, I've never heard that. Maybe it's on page 6 of their sustainability study. Yeah. But I think on both sides, I think there's an understandability of what ESG means for companies and how they can benefit and have higher returns from an investor perspective. And from a company perspective, I think we need to be more loud and proud about how they're doing, because mining sector is doing a lot of great things, but we're not communicating it as well as we could.
Great, and maybe we can talk a little bit specifically about Canada. We were asking people on the show floor earlier at PDAC if it's still an attractive place to do business given current events right now. What are your thoughts on Canada?
Well, I think Canada's a great place to do mining. I've worked on projects in Canada up north in Ontario, and I think Canada's got a great place to raise capital. We've got the flow through share program that's been instrumental in kind of creating the feeder companies for mid-tiers or larger companies and finding new deposits. So I think Canada is still a great place to do business. I think we just talked about ESG, creating that lens and being loud and proud. I think is going to be extremely important. So I don't think we've lost our shine, if you will. I think we need to amplify our benefits of what we're doing.
So moving on to second point in the report that you did, covers maximizing portfolio returns, and I think that is applying to companies and to investors. We've talked before about mergers and acquisitions and divestments. So what do you see coming there? Do you still see more of that happening?
Yeah, there's a couple of things that have happened. Well, especially if you look at the gold sector, companies have really shored up their balance sheets. So what we're seeing now is a lot of, not a lot, but many companies coming out with share buyback programs, dividend policies. So they're in a great financial position. Now with the gold price moving higher, I know it's fluctuating around 1,600 right now, but it's a great situation. They're going to have access cash flows, how to deploy these cash flows, either in productivity improvements at their mine site, which we're seeing as well, shareholder return programs, exploration, to kind of improve grade or mine life. So it's very exciting in the gold sector and precious metal space. Base metals, there's copper's still kind of meandering where it is. Same with zinc. So they're still working on productivity, and they're still having shareholder programs that are good, but they haven't seen the rise like gold's seen the rise. So we're really hopeful that base metals prices will move higher.
Right, and do you have any expectations for where gold may go in 2020? It's a hard question, especially the last week. It's been very volatile.
Yeah, I know you've done a lot of reports on this already, but with low rates and potentially negative rates, and especially with the situation with the virus we're dealing with now, and so it just makes it more attractive for gold. Central banks are buying more gold, so we've seen gold move down on the back of this sort of virus, if you will. But that's just a temporary movement. We saw this back in 2008 when people were liquidated, right? They just want to get funds, just want to get cash. But I think the longer term move for gold is definitely positive.
And driving that would be not the short-term things like coronavirus or anything else we've seen, but what would you say is the underlying trends that we need to watch?
Low interest rates,
right.
Central bank buying, more diversification of sort of the worldwide currency, if you will. And I think retail understanding the place of gold in their portfolio. I personally own gold. I've had it for a long time. I had to learn a lot about it before I actually started buying some, but I've been in the mining sector a long time.
And are you a believer? We hear a lot of people saying we are headed toward an economic crash, an economic downturn as the rates go lower and things like that. What do you think on that point?
Well, I mean, I think there's a lot of resilience in the economy still. I think what we've seen is a lot of cash sitting on the sidelines a year and a half ago, sort of coming through in flows. So I think the flows are important, and especially when rates are low. I think if companies can maintain their business models, I don't personally think we're going to go into recession.
Yeah.
I have to say 2008, 2009, if you remember back then, after the credit crunch, people said, oh, we're going to have 10 years of no growth, when it's been the best 10 years for a long time. So I think I'm very positive on the future. I wouldn't say it's going to be a hockey stick up, but I think it's going to be a Canadian term, of course, but I think it's going to be very positive.
Okay, and just a question on companies as the gold price goes higher. What should they be doing? I know you've been talking about they're in a good place right now. They've tightened up. So how do they remain disciplined?
Well, I think they've learned actually from the past. They've had to be disciplined. So the methodology models, the way they think about the business, has already been created. So I think what we're seeing is that just an extension of that when you have excess cash. So I think that's the great positive news. So we're seeing companies, like gold companies in particular, sort of being able to attract the generalist investor by the programs they have. Like even recently, a CEO was talking about, we put a dividend in place to sustain for 10 years. So that gives investors confidence that even in the face of maybe falling gold prices, their dividend was relatively safe, right? And I think there's a lot of positivity on gold, so I think that's going to be fine. But I think, so that's going to be the great thing moving forward. They're actually running their businesses like businesses, and that's why I think mining companies are going to attract the generalist investor. With good ESG policies.
Okay, so final point that you touched on was digital and data optimization. And we can talk more about it, but one point I want to touch on first is that something that's open to smaller companies as well as big companies? Yeah. Can everybody do that?
Yeah, and I think, the way that mining companies used to think about what's their competitive advantage, I've done a couple of talks on this, so I think it's really important to understand, we've all talked about artificial intelligence. What's that mean with machine learning? What does robotic processing analysis mean? What is that? So there's a lot of benefits for small companies to apply these techniques, and they're getting less expensive. That's the key thing. So it's another way to look at an ore body. So if you're a junior company, you can say, okay, here's another input from the AI model, but maybe I'll choose differently, right? But at least it's another thought process, another tool to use. So I think going forward for mid-tier companies, we're seeing a lot of productivities at the mine site. Large companies are really getting on board, of course. Even Mark Bristow was talking about digital, so it's great. I think it's we're really seeing sort of the early stages of a movement of that sector towards the digital highway, if you want to call it.
Are there any things investors can look at on that note to see like, okay, this company is doing a good job. I think it's one thing that's a little bit new, so maybe people don't know what to look for.
Well, from an outside perspective looking in, I think you have to really take your cues from their presentation, understanding maybe the ore body is conducive to more productivity tools than another ore body. So I think it's really just staying close to management, listening to the conference calls. I'm a big fan of listening to conference calls.
Right.
So I think that's really where you have to, it's good to read, but I think it's also good to hear them talk about it.
Okay, we've covered a lot of ground, but are there any things in the resource space, in gold or otherwise, that you think people should be watching in 2020?
Well, I think if we're going to see mining companies, and the big, of course, the big trend right now, and I don't think it's going to continue, like moral capitalism, right? So as mining companies start to attract the moral capitalism out there or the trillions of funds, I think that's something to watch because that's going to differentiate that company from others. And the greater you can create that differentiation, that polarization is going to be created. And I'm hopeful all mining companies are going to move up, right, which is great. But there's going to be varying degrees of that. So I think that's one thing to watch out for. So I think our sector is exciting right now. We're doing all the right things. We're even on the back of what's happening recently. So I think it's been years in the making. You know how you have overnight success, but it takes 20 years to make. So I think what we're seeing is like the last 10 years of companies getting it right. And actually, we're seeing better policies, shareholder return programs. So just watch your companies that you're maybe investing or looking to invest in.
Okay. All right. Well, thank you so much. That was great as usual. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Jeff Swinoga with EY.